Hey everybody, it's Eddie J on Crypto. Just wanted to start digging in on some of the topics that I announced earlier. So Cathie Wood, everybody had been dogging her out. Her and her Ark investment had been dogging her out for a while because they were down and blah, blah, blah. Well, she's gotten in deeper with Coinbase and Robinhood. $2.9 million for Coinbase, $9.5 million for Robinhood. And I want you to stop and think about this. Robinhood's money, a lot of Robinhood's money, not the bulk, not the larger percentage, but a lot of Robinhood's money is actually made by crypto transactions. The next side over on Coinbase, and I want you to pay attention to this one, she dropped another $2.9 million, and that's after several $1 million of investments over the past couple of months. Now, Coinbase came out with this new thing called a wallet as a service, meaning they have Coinbase wallet and they can actually manage that for you for businesses so that it makes it easier for them to get Web3 adoption. That takes care of security, scalability, and key management. Boom. And you sit there and you go, what is going on? This should be a simple call for you. Coinbase is carving out their space in the coming non-custodial world, because they realize that as more adoption comes, more people are going to be more knowledgeable about how they can manage their digital assets and that they do not need a centralized exchange to do so. That being the case, Coinbase is trying to pave the way for them to have various revenue streams in the coming future, which is that non-custodial future. It won't be 100% non-custodial, but a big chunk of it will be. So that's huge. Huge. And I think it's really smart that Cathie Wood and Ark Invest are getting in while the getting is good. I know, it's a pun. It's an old pun. But still, it's a very big deal. All right? Now, Silvergate. Wow. I've been telling you Silvergate has not been in a good place for a really long time. And guess what? Now they announced a voluntary liquidation. The bank is done. They had a meeting with the FDIC. They just can't do it. They can't do it. So what they're doing is they're closing everything out. They say that they have enough to pay back its depositors. Something that I'm paying attention to is how does it play out for Citadel, which dropped, $25 million, but 10 times that for BlackRock. Now I wonder if BlackRock made the announcement, didn't give the money, because they saw everything was going bad, or they made the announcement, gave the money and got it immediately back. Don't know how that plays out, and that's why I'm interested, because I want to know how that plays out. Now, there are assets. They did lose a ton of business. They basically lost all of their business previous to this announcement. Marathon Digital had a $50 million loan out, kicking up, I think, $75 million worth of Bitcoin. They closed that out, taking back their Bitcoin. So that's a big deal. So I wonder what they're going to do, because they obviously needed that credit vehicle, so they might be shopping around for another credit vehicle. Would that be a signature bank move? Don't know, but they do have to shop around for something else. You had other companies pull out as well. Kraken. I reported on this a couple of days ago, so watch that video. We don't have to go into it again. But these are huge moves that all stem from what? All stems from the FTX debacle. Stemming from FTX, you had a lot of big companies go under, and this is another one. Except this one is going under gracefully. They're not going through bankruptcy. And they tried really hard to keep the bank afloat. And when they saw that's not going to happen, they didn't look for bankruptcy protection. They said, no, we're going to do the right thing, and we're going to close our doors voluntarily. And that says to me that a lot of those people that you see over at Silvergate Bank, you're going to see them in other projects. So I kind of like how they handled that. Here's something huge. Remember a couple of weeks ago, I told you that, the troll Gary Gensler was out there, and he made a statement that it's possible that stablecoins could be seen as securities. He's even going after Paxos and BUSD. Pause for a minute. CFT chairman Rostin Benham said, hold my beer, and said, nah, man. Freaking Ethereum and stablecoins are commodities. Now, it makes sense to me, and I've been saying it for a while, that it makes more sense to me that the CFTC should actually rule over any stablecoin. They're pegged to fiat. No matter what fiat they're pegged to, they are pegged to fiat, especially in the US case. They're pegged to the US dollar. That's his domain. They already manage that space for, foreign exchanges and stuff like that. That is their domain. They know it. They're a better tool to manage it. I never understood why Gary Gensler, except for, a fiefdom play, was trying to lay claim. But Rostam Benham ain't having it. He's like, listen, we can manage that. We will manage that. Now, with the announcement that Ethereum is a commodity, I'm wondering how things running on Ethereum, like layer 2s, side chains, I wonder how those would be seen. And yes, I'm looking hard at Polygon. Anyway, and all of the ERC20 tokens, I look at all of that space, because there's a specific way that Ethereum came about and how it happens. That also could play pretty difficultly for the SEC in their case against Ripple. So we'll see how that goes. Poor little Gary's been taking on a chin for a while, right? Look at yesterday's video, and I told you how he's taking on a chin with Grayscale, with Voyager. The Ripple case is not going well. Just several things are lining up to not make it easy on Gary Gensler and his SEC henchmen. Now, henchmen, that's such a harsh word. It's not. I just think that leadership has a lot of talent at the SEC. But I think they've gone wayward under Gary Gensler's direction. Your boss tells you to do something, you got to do it. So I think that's more along the lines of what I'm really thinking. Because when I look at Gary Gensler, he's doing all these different kinds of things to go after crypto because he doesn't like crypto. But he was late to the game, and that's what I have a problem with. He's very, very late to the game. He's reactionary instead of helping to build guardrails so that we can stop certain things before they happen. Now, Coinbase's wallet as a service, I'm still tripping over that one because that's going to open up the door for many businesses to tap into an API that would give them the ability to integrate a wallet-based services into Web3, because that's how you authenticate. It's going to increase scalability. It's going to increase security, key management, all that stuff for people and companies that want to be involved in the cryptoverse. So that's huge. It really is that huge. I mean, as I look at what we have coming up, for our platform, I'm sitting back and I'm going, that's something that I'm going to have my team actually look into because it's pretty good. Now, wash trading is something where, during tax season, before tax season hits, you want to, declare all of your losses. And the only way that you can declare your losses in the cryptoverse is by selling the crypto. Now, wash trading in crypto land is not like wash trading in stocks where, you can't do certain things within a certain time period. Well, in crypto land, you can still do this. I can sell all of that, declare my loss, and then buy it right back. That's wash trading in a nutshell. And the Biden administration is looking to get rid of that little loophole. I can see why. I can absolutely see why. The IRS already has something on the books where you've actually got to say, if you have any kind of dealings within the crypto space, you have to declare those dealings. Detail them to us, please. And I'm like, wow. So, I mean, I keep a running list of my transactions, so it's not a big deal to me, but for a lot of people, it is a big deal. So I think going forward, that's going to be a nice service for a lot of companies. Anyway, what we should be doing now is looking at the numbers, which are horrible, by the way. Well, but let's dig in. Let's get it. There's nothing good. Everybody's taking a hit on the chin. Everybody worthwhile is taking a hit on the chin over here, right? This whole list is bad, and obviously it would continue if we had a longer list of, losers, right? But what I look at on the losing side is if it's a project that I would want to pay attention to going forward. So who's here that I'd be paying attention to? Lido is one, down 8%. I'd be paying attention to that. Fetch API, which was also down yesterday, down another 8%. Who else is here whose name I would actually pay attention to? I think that might have been it. Oh, Immutable X, down 16%. Wow, that's big. There's nobody that's on the upside. There's nobody on the upside that I'm paying attention to. Nobody. So that should tell you a lot. Aptos is at 0% change, but the bulk of the market is down. And we'll see that in a minute as we go to other numbers. I did want to show you the deflationary move of Ethereum, because yesterday it was down 48. Today it's down 50. You know, it's incremental. So it's not down 48 and then another 50. No, this is how much is burned since they moved over to proof of stake. So this is well, since the merge. So that's a big deal, right? Because as we move forward, Ethereum is going to, even though Ethereum took a hit, this deflationary move is going to play out as time continues. So it's kind of something you should be paying attention to. Don't have to look at that. The fear and greed index, people have a lot of fear. It's down in 44 right here. So when I look at that, I'm sitting back and I'm going, yes, they do have a lot of fear, because what people forget, you know, everybody's complaining about how the US government printed money over the past couple of years, you know, to help during the pandemic and blah, 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 and blah, blah, blah. And everybody's hating on the government for printing money. We had never gone through that before, and they had to figure it out, and that's what they chose. Do I agree with it? I don't know. I really don't know. We had to do something, though. And hindsight is always 20/20. But here's where it falls short. People are forgetting the huge tax benefits that the rich and wealthy got. Before that, okay, trickle-down economics does not work. So the rich and wealthy, institutions, companies, firms, all that stuff, they got huge tax write-offs. Huge. Huge, huge, huge. But nobody goes back that far. They only stop and say, oh, well, you printed money. Sure, that happened. But that trickle-down thing that was supposed to happen with that huge tax write-off for the wealthy, yeah, that didn't happen. They got the tax write-off, and that money did not trickle down. A lot of these companies experience, the highest, revenues, in history, or the highest revenues in a long time. You got to look at the whole story. There's enough blame to go around everywhere. So you got to look at the whole story. Don't just believe the last thing you heard. Do your research and look all the way back. Because when you look all the way back, you start to realize the government, with the two different aisles, as they say, or the two different sides of the aisle, as they say, listen, they're both kind of screwed up. So you've got to start managing your money and managing your money well. And you can only do that if you do your own research. Please, please. All right, DeFi Llama, we're down to $63 billion in total value locked. We had been, in recent days, up to as high as 68 billion. So that's something to pay attention to. Bitcoin, look at this. Bitcoin has tanked. We're seeing this huge fall off the cliff right here, and then we're seeing another gentle fall off the cliff here. We'll probably have a little bit more downward momentum to go. But we're clearly based in the 21,000 range. And I'm really wondering if we're going to wind up hitting the 20,000 range. Now, with that said, I don't know that I'm upset about that. And I know you must be thinking, why wouldn't I be upset about it? I'm not upset about it because to me, it's just another opportunity to get in while the getting is good. Honestly, I really do think it's, for me, I'm looking at, can I put in more, or should I just stay in lockstep with my current DCA strategy and wait a little while before I start using some more dry powder? That's what I pay attention to, right? I'm talking it over with my kids all the time. Like, is this something we should be paying attention to? Why does Coin360 always show up messed up? It's annoying. Come on, let's get it, guys. Get it together. I like seeing the big picture. Oh, my Lord. It shouldn't take that long to move data. So if you look at the numbers going straight across, you see red all over the place. I mean, even though you're seeing this, these slight moves, it's 0 point something % move. All right. So it's still red. So then go take a look at the 24-hour and the 7-day, and you see, oh, we're red all over the place. Who's not red? I'll show you who's not red all over the place. That's XRP. They've been getting good news so far. So they could be seeing themselves hold ground. So I'm paying attention to that one. I'm a Ripple fan. looking at, I'm surprised Tether is still doing well, but I'm not touching Tether. I'm not dealing with Tether. I'm looking at Polygon, which had been down as low as $1.04. Now I want you to picture this in your head. It was down as low as $1.04. It might have been lower. Let's take a look at that chart. Come on, let's go, let's go. Give me my chart. There you go. So it was down as, yeah, down as low as $1.04 over the past, day. Okay. So down at $1.04, that's a huge drop from $1.51. Huge drop from $1.51, right? And that was just what, a week or two ago? So then you sit back and you go, well, can we get back to that? And I think, yes, we can. It's just a matter of when we get back to that. But that's that's like what, almost a 33% drop. So when you look at that, I'm kind of like, there's an opportunity to get in. There's an opportunity to actually make some money off of that, because Polygon has a lot of news up its sleeve. SHIB is supposedly going to do better when Shibarium comes out. It's still a painful look right now. They've dropped down to number 15. They had been as high as number 13, I think. But when I look at that number right there, I'm kind of like, not too bad. But then you also have to look at year-to-date numbers. Year-to-date numbers, when you look at Solana's still up 85%. When you look at Polygon's up 38%, almost 39%. Shiba Inu, 34%. But I'm looking at these numbers with a grain of salt and with a grain of what's going on right now. So if Polygon can get back to $1.51, $1.52, that's a big swing that can happen. And I think that'll happen I think all the coins as a general case will be up, come summertime. So I'm trying to get in now. That really is just how I'm looking at it. Let's take a look at this now with the bigger picture. And you can see, how you're red all over the place. And you only have spots of green like XRP, BNB. BUSD is up, but it shouldn't be. It should be pegged to the dollar. But BUSD right now is at $1.04. Like what? So that's crazy. And I do mean $1.04. So that's nuts. I would not be buying it now, but if I was holding BUSD, I'd be earning 4 cents right now, or 4%. So that's kind of weird. Matic is down dramatically. Obviously, there are a lot of coins that are down a little bit, but certain coins are down dramatically. I'm getting into Matic. Something else that I'm paying attention to is Cardano, down 2 point something percent, but it's down at the 31 cent range. So any place around that range, and I'm thinking Cardano could be a good buy. Anyway, this is Eddie J on Crypto. If you have questions, if you want me to research something or anything else like that, do me a favor, drop me a note somewhere. I'm on several different platforms, about to be on another platform, about to be on television. So there are a lot of things going on. Anyway, hope you have a good one. Bye-bye.